Yeah, and we have three different programs. We have a kind of our base program. You just pay the insurance, and here's your coverage. And then we have an experience credit program where, as you're familiar with, it's merit rated. Basically, we're looking at what's there been in the last 3 or 4 years experience, develop that rate. If they're in our experience period program, we charge a little bit more up front, but they'll get a credit on the back end.
Welcome to Insurance Shop Talk. This is the podcast where the world of commercial insurance gets a little closer to home. I'm your host, Eric Stein, and in every episode, we're taking a deep dive into the insurance industry. From the latest news and trends to in-depth interviews with insurtech experts, carriers, and agency newsmakers, we're covering it all. So sit back, tune in, and let's start the conversation. All right, today I've got a pretty interesting topic that's related to insurance, but it's mainly a revenue source for P&C agents. And we have Ron Lucki with us with UC Assure. Ron, how are you?
Good. Thanks for having me, Eric. Appreciate it.
Absolutely. I appreciate you coming on. And so what I like about what Ron's doing is that it's an unemployment administrative service for nonprofit organizations. And it gets introduced to nonprofits many times and mostly through insurance agents. And because Ron was an expert, he'll tell you more about that in the workers' comp and P&C world at one point. He likes the model of brokering this through agents and commissioning agents for the referral and handles everything soup to nuts. So we as agents don't have to learn a whole new model, new product, but it's insurance related, but albeit unemployment insurance, not what we're all used to in the P&C side. But I just want to kind of set the stage up for you, Ron. But why don't you start with a little bit about you and your background and where you're located?
Yeah. All right. Thanks. So, yeah, my name is Ron Lucki. Again, I'm Vice President of Business Development for Ohio Indemnity Company. The product that I market is called UC Assure, and came here about 11 years ago. Now it's kind of surprising, but was in the workers' comp world, uh, workers' comp TPA world here in the state of Ohio, most of that business, and also in unemployment. So about 11 years ago, I got recruited to come here. It's a great insurance company. It's been around since 1956, and the program is very unique. It's a niche product that's only sold to nonprofit 501c3 nonprofits, to be specific, Native American tribes and government entities. And so when I came on board here, one of the things we started looking at was how is it being marketed? And they were doing some direct sales, but still most of it was coming through agents. And so when I came on board here, I really made an effort over the last 11 years to really create a nice network of agents throughout the country that we can share with them targets in their area of nonprofits that haven't taken advantage of this unique program that's available to them. Because one, the federal government, they don't pay nonprofits, as we all know, don't pay a tax. They don't pay a, a commercial tax, just like any other business. They don't pay the unemployment tax from the federal level. However, on the state level, they have to have unemployment insurance at the state level. But back in 1972, they came up with a new Federal Unemployment Tax Act, which allowed nonprofits to not to basically opt out of paying the state unemployment tax. Again, they had to do it, or they can reimburse the state. And that's where our program comes into play. Instead of them paying the state unemployment tax, they can reimburse it. But Eric, as you and I know, being in insurance, that's a lot, takes on some risk. Depending on the organization, if they're larger, they have the resources financially, they have the HR people that understand unemployment, they can maybe do that as a reimbursing, meaning they're paying dollar for dollar the cost of those claims back to the state, whatever state they're in. In some states, it's on a monthly or quarterly basis, but basically, if they go into that reimbursing status, they pay dollar for dollar the cost of those claims. So you could do it just like that, self-fund it, maybe self-management, maybe get a TPA. In our program, what we do is we take some of that risk away from them. Instead of them self-funding and self-administering, we provide them a one-stop shop. They get the claims management, hearing representation, account management, insurance protection for when there is a downturn in the economy, that they're not out on a limb and all of a sudden they're having all these claims coming through. They don't have any protection. And that's what they would have under that, just that basic reimbursing model in each state that's available to them. And the big thing here, Eric, too, is it, it's it's a pretty expensive. And I'm going to give you some examples later on as we get through this, but I always tell folks it's about a 2-to-1 ratio. So every $2 that a nonprofit's paying in to the state unemployment tax system, if they're still in it, the state's only paying out about $1. So you can see there's a pretty good gap there. And that's where the savings comes into play.
Oh, perfect. And what states, Ron? Every state or?
Every state, a nonprofit, again, they have to be a 501c3. So mental health facilities, hospitals, YMCA's, Boys and Girls Clubs, um, retirement centers, any of those organizations that are a 501c3 specifically. It can't be a C4 or C6, which are some other designations under the IRS tax laws. Um, Native American tribes are the other ones, and then, as I mentioned, government entities.
Okay, okay. So then, have you run into some agents that specialize in government entity business as well?
Yeah, actually, we used to have quite a bit of business in that area because it came because the agent was focused in on government entities. The problem with them today, I think, over the years, and remember, this program dates back into the 70s. Really, once we started underwriting in the late 80s. Matter of fact, the gentleman that underwrites it's been doing it for 36 years, underwriting this specific program. And there was some focus on the government entities, but I think a lot of them have ended up just becoming more reimbursing on their own, self-funding it and self-managing it, just because probably within most government entities, it's pretty predictable compared to a nonprofit who may be more subject to grants, donations, things that throw them off from a standpoint of employment compared to public entities. So right now,
So it's
yeah,
common they lose a grant and then they have to lay off what, 50, 100 people at the one
could
time?
be, or even if it's a couple, a couple in certain states could mean 15 to $20,000 depending upon their earnings, their wages. Then the state pays out as long as, most states up to 26 weeks. So if someone's getting paid $500 a week, it could add up to a substantial amount of money, even if it's only a couple of claims.
Okay, okay. So it doesn't matter about the volume really, because it could get expensive for this kind of entity, especially.
Right. And the one thing about the program too, Eric, and even unemployment, it's more predictable than workers' comp and any other insurance product lines you're involved with, right? Large liability limits, workers' comp, long tails. If you think about the unemployment market, it's most states it's going to be 26 weeks maximum in normal times that someone's eligible for unemployment benefits.
Okay. And then so like walk through like a referral process, like I guess
Hmm.
that you like to recommend to your agents that you work with and like for best practices and to make sure it's a fit. And then, you
Yeah.
actually going out on an appointment or Zoom meeting. How do you like to
Yeah.
work that?
Yeah, great question. One of the things what we try to do with agents throughout the country and how we've started to create in our distribution market was identifying nonprofits in their location, in their area that we know are good targets. And what our target market normally is nonprofits with about 100 or more employees. Um, Maybe they have paying unemployment taxes of $25,000 or more, or they're having unemployment claims and they're paying over $20,000. So I kind of use that as a base guideline in most states. At 100 employees, someone will say, "Oh, I got one in New Jersey, there's 75 employees." Well, they still could be eligible for our program. They could be a fit for our program. They're always eligible for reimbursing. It's just a matter of whether or not they're fit for us. And by providing an insurance product, if they're smaller, they're probably better off staying in the unemployment tax system
Okay.
just because of the risk and everything. But as they get larger in that 100 employee mark, and depending upon the state, in the southeast, down where you are, the unemployment rates, the tax rates, not the number of unemployment's down throughout the country and it has been for a number of years, but the unemployment tax rates in Georgia and I call it the Southeast Conference, right? Those states, the unemployment tax rate's lower. So now I'm targeting 100 employers that are maybe a couple hundred or so or more employees. So getting back to your question though, I like to help the agents not waste their time, show, hey, here's 5 employers in Gainesville, Florida that we're targeting. Do you know them? What's your relationship with them? And they may have a relationship with all 5 of those. And really at that point, only thing I'm trying to do is get an introduction, just like you said, through a Zoom call, talk to them a few minutes. Hey, how are you managing your claims? Are you still tax paying? Are you reimbursing? Maybe they're with one of our competitors, right? And so we're just trying to find out at that time whether or not there's a reason to go further in that process. So within a few minutes, Eric, I can identify whether or not we're going to be a fit for that organization. So again, we're not eating up a lot of time for HR or finance or the agent's time. And so let's say they were eligible, we think they're a good prospect. What we would then do is we have a one-page application, takes several minutes to complete compared to
A
any other
quarter. Yeah.
applications. Yeah,
Yeah.
Cord or any other applications you're having for your clients fill out. This takes minutes. And if it takes longer than that, I always say, well, then that gives you even more reason for our help because that information should be readily available either in finance, HR, or they can go online and get it at the state system. So really what I'm trying to do with the agents and just make that introduction. We'll walk you through from that getting the application, providing an analysis back. We'll do another Zoom call, share with them our results and whether or not we're a fit. And it does come down to direct dollar savings and currently how they're managing the claim. Do they have the resources or they don't have the resources? If they don't, then we're definitely going to be a fit. And even if our program doesn't fit from an insurance perspective, I always tell most nonprofits that whether they're with us or any of our competitors, they should at least maybe have a third party administrator take care of those unemployment claims because it is more task driven and have HR focus on more important strategies and things that are happening within the organization that they don't have to deal with these tasks that come up every so often. And so from the agent standpoint, they're bringing a new program to someone that doesn't take much time to implement. Implementation call takes maybe 20 minutes, doesn't take much time, doesn't really do much to finance. Finance, it's really about, okay, instead of us paying the state, I'm just paying UC Assure or one of our competitors, and those I'm paying them, and then the claims come from the state. The state's always paying the former employees. Our program then reimburses, right, the state for whatever charges that come through. And if you think about it really from a tax paying model, where I said that 2-to-1 ratio, we know there's a gap in that a big difference between what the state and what they could be charged. Now all of a sudden we're able to lower that cost and it can be up to 40, 50, 60%. Our last year was 43% was our average savings for these employers. And then going back to the agent piece, they really don't have much time or effort in this whole program. Once we
Right.
get the program,
Introduction, maybe first one, if everybody's happy, then it goes to the next level. You could either go, do the next meeting by yourself or with the agent, right?
exactly.
Whatever the
That's
agent
exactly it.
prefers.
Yeah. And then from there on with the renewals, one, we have a 99% retention. It's because, and the other thing is too, I think we do a great job servicing, right? All of us always think we do a great job. We have an experienced team, but I think once unemployment's off their plate, it becomes they're focused on so many other programs. It's still important, but this is one that they can kind of take off the table and hand it off to somebody because it is more, they're more tasked to it. And for the agency and the agent, only thing they're really receiving from us are the recurring commissions that we're paying on a quarterly basis. There really is not any more paperwork for them to do going forward. I've been here since 2014, Eric. I have a number of agencies that came on board right around that 2014, 15. They still have clients on board in their book of business that we signed up that first year. It's been going on for almost 10 years that they've had it in their book of business, and they really don't touch it. Most of them just look at it as kind of an annuity to them because it's a good service. They really don't get hit with a lot of questions about it from the client because everything's being directed back to us and our claims team. It's just more of another ancillary service that they can offer to their nonprofit clients.
Right. And who at the nonprofit is the best contact normally?
Yeah, it's normally going to be your HR staff that are dealing with the claims on a daily basis or dealing with them when they arise. Then normally finance is certainly going to be involved with the CFO and determining whether or not there's a big enough savings for them to make that change. In my world, I always think, hey, if I can save someone 5, 10, 15, $20,000 or more, right, as a nonprofit, that's just money that's going back to that organization instead of them overpaying for something that because they're in the tax system. That's it's a pooled program, right? I have contractors, retailers, hospital or um, restaurants, everyone involved in that pool. And now all of a sudden, when we're working with them, we're looking at them on an individual basis. What's been your past 3 or 4 years of experience, and what's it look like going forward? And then we can develop a rate that's more specific to that organization, not as part of the state system.
Okay. And like, yeah, what is the savings number that usually drives the decision? Like, have to be normally.
Yeah. I well, I'll give you one example last year, and just this is the close numbers, but we had a couple like this. One was it was $100,000 they were paying in the state unemployment tax system. They had $25,000 in charges annually, right around that. I think they went to 10, 15. And the last year we saw them when we were doing the analysis, they were up to $25,000. So basically, we took that $100,000 unemployment tax and turned it into a $50,000 fee for us, right? That gave them protection up to $250,000. We're managing all the claims, attending all the hearings, and they have one fixed cost that's they pay on a quarterly basis to us. So we have a rate. They multiply their quarterly payroll from the previous quarter times that rate, and that's what they pay us on a quarterly basis. And then out of those funds, obviously, we have our premium and administration that we're paying for any claims that come through for that client during that year, during that policy year. And one of the things is too, when we do bring them on board in most states, Eric, it's going to be a 2 year rate guarantee. So depending on the state, but most of the states, it's going to be a 2 year rate guarantee. So, and in every state also, they have to be out of the state unemployment tax system for 2 years. Okay. So
Okay.
that's kind of reason we do the 2 year rate guarantee. But since I've been here, Eric, we may have had one employer go back into the state unemployment tax system. It'd be like me saying, "Hey, I want to overpay on my homeowner's insurance. You guys do a great job. I just want to over." It makes no sense for them in most cases to be in the tax system. They can get a better rate and better service, I think, by being in with us or one of our competitors in this market.
And so the insurance you're offering is like almost like a cap maximum they would have to pay in an unemployment. And that's what the benefit is of the insurance piece that you offer, right?
Correct. And the downside of obviously in the within the state system, there's no limit of liability. They could have as they could shut down and close everyone or everyone's unemployed. In our program and just with any of our competitors, that if they meet a certain, like in our program, if they meet a certain limit and they would exceed that, then they would have dollars coming back out again to pay for those unemployment claims that occurred during this year. Since Steve's been doing this, and even during COVID, with all the layoffs that occurred, we haven't had anyone hit their max liability in years, he said. Probably dating back into the early 90s, he said.
Yeah, that's surprising during COVID, especially. Yeah.
Yeah. Well, and a couple things happened there. There was some federal relief that happened too. So it wasn't all us or any of our competitors. Some of it was due to federal regulation. But a lot of times, as much as saw layoffs, it depended on the industry
Right.
and how long those folks couldn't get back to the work because of the type of work, right? They shut down a YMCA, for example, right? Those were the organizations that were mostly impacted. But in some cases, they only have a lot of part-time employees too. So the overall numbers never rose to the level that we thought they would.
Got it. And then I
So,
noticed from the brochures you sent, you kind of have different levels of options they can choose, and
hmm
you'll base give them the right appropriate suggestion, I guess, of which
yeah,
one.
yeah, and we have three different programs. We have a kind of our base program. You just pay the insurance, and here's your coverage. And then we have an experience credit program where, as you're familiar with, it's merit rated. Basically, we're looking at what's there been in the last 3 or 4 years experience, develop that rate. If they're in our experience period program, we charge a little bit more up front, but they'll get a credit on the back end if their losses do better than expected. They're doing better than expected in that year, then we're going to give them a credit back to future payments.
And then you said earlier you help on the administration piece, so you got people attending hearings by phone and or I guess not, I don't know if they do much in
Yeah,
person anymore.
yeah, not as much anymore, but you're right. It depends on the state. There's still some in-person hearings, but a lot of it, you're right, has transitioned to telephonic.
Okay. Hey everybody, it's Eric. I just want to pop in for a quick announcement. Exciting news. I just launched my new book on Amazon. It's called The Blueprint, an insurance agency's unconventional rise to the top. And it goes through a little bit about how I built the agency Insured Solutions since 2009 to today. And the blueprint in terms of how I actually did it with the tech stack, the offshore, nearshore talent, and digital marketing techniques that I use. So pick up a copy today on Amazon. Thanks, guys. Um,
Um,
Go ahead.
Eric, I wanted to share with you just one example, and if any agents, as they listen to this, here's an example of one I just got in yesterday. They're paying about $65,000 in unemployment charges for the last, since 2023, they paid 62,000, and in 2025, they paid $46,000. Okay.
Okay.
We'll be looking at them for the 2026 year, effective 1/1. Their charges, the benefit charges in the state were for 2023 was $1,000 they paid out. The state paid out $1,000 and they paid in $65,000. The next year, 2024, this employer paid in $62,000 and the state paid out $83.41. You can see where the difference is between what they're paying, what's been paid out, and why would you continue to go down that? Why would you continue to be a part of that model when they're just it's a significant overcharge for the risk that the state has. But again, it's part of the pooled program, and I get it. That's the way it works. But this is an employer that they'll end up probably saving $30,000 to $40,000 on January 1.
And that'll make the agent look like a hero, giving a
It's good.
nonprofit some kind of state, saving
Right.
that especially, right?
Yeah. $30,000 in savings he's going to take back to them. One, if he didn't have any of the business, and we had a couple of this happened last year. If they didn't have the business, they end up picking up the property and casualty, depending on what side they came from. Last year, I had one a lot larger one than this. The gentleman picked up, I think it was another $25,000 in revenue because he picked up other insurance lines.
Oh, gotcha. Yeah, I was going to ask you on
Yeah,
that. Are you normally running into agents that already have these nonprofits as current clients?
yeah, yeah.
Or is it a prospecting tool if they are going after that niche? I mean, obviously, you got to be sort of niche focused, right? If you're an agent going after this business, it seems.
Yeah, yeah. In both of those scenarios, this one here, he doesn't have the business, doesn't have any of the property and casualty or employee benefits. It's just a local company to him. Okay, this one. One last year that I gave you an example of was they had the employee benefit side of the business. He went in trying to get the PNC by using the unemployment program.
Okay. And on the prospect side, is that agency one that specializes in this niche, or it would just happen to be a random? Okay,
Uh,
that's
he just
wild.
once they learned about it, he was using it, and him and a couple of the other agents within the organization were using it as a way to open the door into some of these nonprofits that they didn't have a relationship with in the past.
Oh, that's fantastic. Okay.
Yeah, and it goes both ways. It's just not this gentleman happened to be the property and casualty side. The other one I had a lady, she was on the employee benefit side and was using it to get into some new clients.
And the question the agent would ask would be, are you using any sort of, A, do you have over 100, employees, and B, are you utilizing any sort of outside unemployment claim service, administration
Yeah.
service, right?
Well, and the one quick question is, are you paying the unemployment tax still? And let's say it's in the state of Georgia. Hey, are you still paying the unemployment tax? Okay. Oh, you are. Okay. That gives us another good reason. Oh, no, we're already self-funding it. Okay. Still a good reason for us just to take a look at it. Doesn't take much time or effort. Um, and that's probably the easiest question to ask. How are you currently managing it? We have a program that doesn't take much time to look at. We just gather some information and we come back with an analysis for you. So
Of claim handling and reducing cost and reducing exposure.
yeah, you're right. You look at it from it's a direct cost savings. Can we save you money? How are you currently managing it? Meaning, is there an Eric within the YMCA that's managing those claims as they come in? And would it be better off being you can would you like the support from somebody else to manage that process, the claims and the hearings, and also give you an online system to manage those claims depending on the size? I'll give you one more example real quick. I had an organization last year. They're based here in Ohio, but they had 18 different states. I'd been trying to talk to them for over 7 years, but because they had turnover in HR so often, I just wasn't able. Every time I'd get a little traction, it would stop, right? And actually, I was with an agent. The agent was they had the employee benefits. The agent I was working with this client was a PNC agent. Opened the door. We've been working with them, tried to get their business, but again, turnover in HR was hurting them from a standpoint of taking a look at this. We finally got it into place, saved them about $100,000. The biggest reason the CFO told me they ended up doing it, obviously the savings was nice, right? But long term, managing those 18 states, he said they weren't. They weren't compliant in some states. They were late on their payments to the state. They were filed as a taxpayer in some states. They were filed as a reimbursing employer in the other states. So now they have one payment to us. They weren't making 18 different payments. They have one payment to us. We have a claims team that manages all their claims. All of their online, when they report a claim in, it goes in online. They can look at the claims, they can look at the status, and any management reports come out of that. They didn't have any of that before. So it simplified that whole process for them because as the new HR director told me, because we just weren't even paying attention to unemployment.
Yeah, that happens definitely in general with employers. I've noticed. I haven't personally dealt with a lot of nonprofits, but it's and if you miss those hearings, then I think the person just wins the claim, right?
Yeah, you're losing out on that opportunity to win, right? That's correct.
Yeah, so a lot of time, and the way that it seems like Georgia works, as I remember, they were haphazard from the claims folks on the government side of getting in touch, about the date. It seemed to always happen to the last minute,
Mm-hmm.
the scheduling of it.
Yeah, right.
But I don't know, maybe that was just something that I ran into, but so it's hard to kind of keep track of. So that system you guys offer is great. And then as far as the revenue sharing for the agent, can you give some examples of how that works?
Yeah, the program's normally set up this way. They get 7.5% the first year and then 5.5% thereafter. So it's on a quarterly basis. That first year it's 7.5%, and then it goes to 5.5 after that
Of what? Of what?
of our fee, of our
Fee.
total fee. So in that example I gave you, we're charging them $50,000. They'll get 7.5, and then 5.5% of that going forward after that.
Okay. And that's just for the introduction. They don't need to learn a new product, new process. You'll handle everything soup to nuts. And then to get the value add if you're prospecting, obviously. But if it's a current client, to give them this, if they aren't doing it or don't know about it, to get you in gives that extra value, right?
Mm-hmm. Exactly. Doesn't take much time and effort on the agent's part or the agency.
Yeah, I
Uh,
know we're all things are changing rapidly in the insurance carrier world and requirements. So and trying to learn something brand new that's kind of totally out of the box, so to speak, and from a PNC world, as is scares an agent because they want to stay focused.
mm-hmm.
But the nice thing again is using this as a tool, prospecting, keeping clients, with the value they're offering, and then you get a little money just for the introduction and not have to do any relearning. And it sounds great about that one page process versus what we all have to get, to get
Oh yeah,
a quote going here.
yeah. Mm-hmm. No doubt about it.
Well, no, it sounds great. I mean, like if they are with a competitor when you go in, how do you deal with that? Are you competitive against it with service or price, or
Yeah,
what do you normally do?
good question. Right now, I'd say there's a couple organizations that are somewhat similar to us, not truly maybe with the insurance backing. What we run in a lot of is trusts out of California. There's a couple trusts out of California that operate throughout the country. Again, good competitors. They're all just different models. Uh, And then my biggest competitor, Eric, really a lot of times is just the tax system and overcoming that. Someone that's familiar with, oh, we pay this unemployment tax. There's no other things to do. There's no other way. Well, yeah, you can do it. This isn't anything new. It's been going on since the mid 80s. Uh, but getting them over that fear of making a change, even though you're showing them significant savings, my normal obstacle is them moving away from the state because they feel like they're giving something up. I had a lady tell me the last week that she said, well, I can't move out of the state because we've paid so much into it and compared to our losses or our charges. I said, well, that's the reason you would do it. She goes, well, I'm going to lose that money. I'm like, you're not going to lose that. Reserving that they're using in your calculations is purely from a calculating your experience credit, your experience rate on top of that base rate within the state. As you know how with an experience rate program, right? It's just used in the calculation. You leave or you stay, you don't get that. You don't get what you've already paid it over and above your any claims. They're not getting that back. And she couldn't get over that piece of it. So that's more my challenge of overcoming someone moving away from the state and being comfortable with it. And then in some cases, you may have to get their board to feel comfortable with it, right?
Yes.
So
Yeah.
that's where I think
You
the
deal with that
agents.
part too, right?
Yeah, right. And that's why I think the agent's so vital for us of being on that local level and having that relationship. And that's what I love working with the agents throughout the country in different areas because they have that local relationship. So when that does come up, like, well, who are these guys in Columbus, Ohio that's offering this program? Right.
Right. Right.
So,
Yeah. I've heard the board meetings are challenging. You've got to deal with all these different personality groups, right?
yeah. The fortunate thing is on this, sometimes it depends on the state. You may need a board resolution, but 95% of the time, the CFO or someone's able to explain it well enough. And I'll get on the call and even do a board meeting with them just to share with them how it works. But once they're comfortable and they see what, hey, yeah, you're the YMCA in whatever county, the YMCA over here has been doing it for years, right? So to give them a call, here and here's some of our references. And then once they see that, they're like, oh, okay, didn't realize we could do this.
So then your attendance at board meetings is not that high because the VP
Yeah,
or the CFO can handle it, right?
yeah, you're correct.
Okay.
And in some states, you don't even require a board resolution. Ohio's kind of unique. They do require a board resolution, but a lot of times it seems like that's just the CFO or someone taking it to the board and the president and them getting a formal commitment to it.
That makes sense.
And then just to leave you with this too, we do once we get the paperwork, we'll do all the filing with the state and notifying the state, hey, this employer is wishing to become move from a contributing or tax paying employer for unemployment to a reimbursing model. We're going to be the third party administrator. We're going to be the one signed up and getting all the communications. And it's pretty good. It goes pretty smoothly. And then we normally get notified from the state at the beginning of the year that yes, so and so goodwill has been accepted into to being in the reimbursing status, and it's a pretty simple process. The one one other thing to mention is that there are deadlines in most states, so deadlines to file. So if you're tax paying, you're currently paying the tax in that state. For example, here in Ohio, in most other states, you have to do the filing before December 1st. So you get towards those holidays, you got to get that paperwork in. New York, for example, is January 1st. New Jersey's February 1st. But most other states are on that December 1st. California, a couple of them are unique that you could do it every quarter. Now, if they're with a competitor or they're doing it on their own, they can make a change anytime that's relevant to their current contract with whoever they may be working
Okay.
with. Okay.
So you may be early. You can't do it. Can you do it before the deadline or you got to
You
get
can't do
extra?
it. No, we just have to file because even if I had someone, let's say this employer decides to make a change tomorrow,
Yes.
we'll file the paperwork for them, but we'll have to do it before, in this state, it's before December 1st. We'll do the filing of the paperwork before December 1st. Effective 1/1, they will be under our program. They'll no longer be paying the state, and the payroll company will put that unemployment tax rate to zero.
Okay.
So
So
then everything's moving forward that way, and then they just start paying us on a quarterly basis, just like they would in every state. So as I get back to the simplicity of it, for the finance department, it's just a matter of who they're going to pay, right? Just a change in who they're paying. It's not a big change for them.
got you. Gotcha. Okay. No, that sounds
Okay,
good. So deadlines are important. Can't just switch mid-year, and you'll handle all that filing.
correct.
P&C agents, have you run into Byberg, which is a Berkshire Hathaway company quoting workers' comp for either your prospects or clients? Well, great news. Insured Solutions, a national MGA, has an appointment that is set up to allow you to quote, bind, and service Byberg at your agency. And the coverage is in all states. It's A-rated. Startups are even accepted. There's 125,000 maximum premium. And some of the tough industries they write are construction, transportation, that includes towing and parcel delivery, manufacturing, security guards that are armed and unarmed, motor mediation, and many more. So go to our website at insuredsolutions.net, click the Get Appointed link. We'll get you logins for you and your team, and can set up a webinar for training if you'd like. Also, feel free to email info@insuredsolutions.net, and I can handle the submission myself, or call 770-402-5343. Be glad to speak to you and give you more detail. Thanks. Great. Anything else you can think of that would be important for agents to know?
No, if any time they have questions, feel free to call me. It, within a brief, I know we're going a little bit longer here on this, but I have a quick cheat sheet for them, quick frequently asked question. Takes a couple minutes to read, and I think once they take a look at it, like, oh, okay, similar to maybe a workers' comp in some states, similar to other ancillary programs they may offer, that's not going to require much of their time.
That's great. No, actually, go ahead and, if you don't mind, like share your information, the best way to reach you, and phone and email and all that good stuff.
Yeah, sure. It's Ron Lucki. I'm with it's UC Assure. It's UCASSURE.com. My direct dial is 614-220-5231. So I'm available to them all the time.
That's awesome. So no, this is good stuff, Ron. It's totally outside the wheelhouse of what we normally see. So that's why it's good to kind of learn these things in my opinion, for all the right reasons, and then earn some revenue for having it.
Hmm. Hmm.
So
Well,
I
Eric,
appreciate
yeah,
the time.
I appreciate you having me on your podcast. I really do.
Absolutely. So talk to you soon. I appreciate it.
All right. Thanks, Eric. Take care.
Thanks again for tuning in to Insurance Shop Talk. If you enjoyed our deep dive into the latest trends, please don't forget to like, subscribe, and hit the notification bell so you never miss an episode. Until next time, I'm Eric Stein, and this has been Insurance Shop Talk.